Alrighty, it's Thursday. We're getting closer to that weekend. And this is Doc from North America. Good morning, good afternoon, and good evening. And so, when I say good evening, what is it now? It's 9:32 p.m. in Tokyo. So traders everywhere in the world are doing something. Trading, or having adult beverages, or whatever. So let's see what's going on today. There is the dollar index over here, and here is the dollar index right over there. And what you're seeing here is that the dollar is still firm because the bonds, interest rates have been slowly rising over here the last couple of days. Or consistently rising. Let's put it that way, consistently rising, and there's definitely a firmness that's going on. They don't really have how to say this. Ooh, let's kill that. What do we got going on there? Let's make that. There we go. There we go. Something jumped out there sound wise. So really, what it comes down to now is that the pairs trades. They're not the worst. In other words, they don't look. Let me kill my sound because I think I'm in the background too. There we go. That killed that. Excellent. So the dollar is getting firm, but it's not exploding. What are we in the 103s? Is it 103.70? You can see there on the DXY. Same thing over on was it the CME? It's 103.60. Is that 61? I think that's what that is. 103.61. It's pretty much matched up relatively close the way they work now, price-wise. And so compared to the index, which was like 10,000 something, so it's a lot more relatable. And you can see there we're in the weekly buy with no problem. It's gonna close there. So it is going to get back up there. I don't know if we're going to go to the 105s. Let's squeeze this over a little bit and see what it looks like. But right here you can see it looks like the 105s could be the challenge at this point. I don't think they're going to get that high. I really don't. I think that the interest rates to a great extent are just bumping along. They're it's not the worst. I guess you could say when we go and look at let's take a look at the 5-year bond or the 30-year bond, things like that. It just isn't nowhere near. Just is nowhere near the situation. Let's see if we can do this here. There is the 30-year right there. You can see it's not taking out that low, and since it's not taking out that low right there, it's not. It doesn't look like it's going to get too aggressive. There's and then you can see where the lows really were back in here. So it's kind of it's kind of like saber toothing, and it's making a higher low at the moment. We did slide into a weekly sell last week, and then you can see on the fast algorithm, was it the week before? No, they did that together. And then on the short term, going down to a 5-year, right there, and you can see the 5-year. Let me just reload that. Reload. Really are right there. And that wiped out data that was fixed. Darn. Okay. Anyway, that'll clean up. I'll clean that up after the webinar. But it's showing the same thing. It's down. It looks like it's trying to threaten a little bottom in here. Let me just double check that. Let's just double check that real quick. I don't think that. I think that took out that one day where they sold it down, so it's not reflecting correctly the action in the 5-year. That's not what I want. Let's get rid of that. Where are you? Not there. Not there. Not there. There we go. Right there. Let me go to the exchange floor itself and take a look and see what they're quoting it at. Because I don't, the way I sent it out this morning. Here, as a matter of fact, let me show you how it was this morning. Right there, and right there. There we go. And we'll stick that up on the screen right there. And you can see that big day there. And let me just double check that to make sure that's real, and I know it is. But let me just see it. Yep, seeing that. And so when I refreshed it, it knocked that out. A very delicate situation. You see here, see where it is right there. That day right there is not, that high was way up in here. That's when they were really confused. So we are, we're not through. The last I looked, and I'm looking at the exchange floor. Matter of fact, that is wrong right there. That needs to be fixed also. And then that is right, though. The action we're seeing today is right. It's making a bounce, but it has a little bit more work to do than what this is reflecting, because it's the bad data from right there. So, and we'll fix that. But that's why you see the currency pairs weakening against the dollar. And I don't think it's going to last long. I think that the fact that the shorter term money is trying to lift up like that is very positive. Now let me just go look at the exchange chart live, and more than likely the 30-year is doing somewhat of the same thing, but I don't want to guess at it as much as I'd like to look at it. Yeah, see, so for the 30-year, it is not, and I repeat, it is not bouncing up like the 5-year. So the short-term money, all of a sudden, what do you call it? There it is right there. That's the way that is today, and that's okay. In other words, it's doing the right thing there. Matter of fact, this is wrong too. I think this needs to be fixed also. When I refreshed it, it messed that up because it has a big high on that day. So we'll straighten that out. But that's what's going on, and it's not affecting anything here at the moment. The weekly itself could be a little off, but it's in the negative either way. So, and we'll clean that up, and that will be something we go after tomorrow. That's the teaser for tomorrow, is to look at the bonds correctly. And me not to just click and say refresh, because sometimes when it refreshes, it explodes the bad data into it again. All right, and that's why the pairs trades are losing a little bit against the dollar at the moment. And when you really go up and look at it, let's see, where's it at? Right here. When you go back to the dollar index itself, where's the dollar index? Right there, and right there. There we are. We should also change that color, the background, so it's much more clearer. And you can see there it is. It's not taking out this high. This is interesting. The fact that we're seeing that much strength, that is interesting. It's climbed up over the last week too. The fast algorithm has been in a buy now for, this is the 3rd week, whereas the slow one is just climbing in, and that can be a top. I've seen that too many times. It's one thing when the slow joins in with the fast together. It's another when it takes a couple weeks to catch up. That can be the end of this move. And that's what I'm thinking we're seeing here with the dollar pairs throughout the planet. I think that they're all going to start to get some strength again into them. And then we'll keep an eye on that. I did see, let's go over to the euro. I did see the euro this morning. See that there? It's up a little bit higher, and it is pressing into the sell, just like this here, where the fast broke down a couple weeks ago, and the pressure has been on. You can see that. And then we slid into a buy for this short period of time here, and it's trying to get back into the sell here. So it's not really making any big difference. It still looks like a base, but again, traders will sit and watch and trust the math, and that's usually the answer to everything in the end. Trust the math, and that's what we see at the moment. Is we're seeing the weakness with the pairs, and we're seeing the strength with the dollar. And everybody knows here that follows us that I am always much more of a dollar bear than a dollar bull. I mean, I don't fight the math, but we're not really, we're not like expecting to see the dollar go back up into the, the 109, 108, that thing. I'm looking more for the 90s at this point over the next 6 months. All right, and let's put it up on, there we go. Let's put it up on J4X. Let's put up the euro there. There it is right there. See that same thing? It's doing that hesitation, but notice the sideways action. it's trying to lift, and it's not exactly getting much of a push. Just like here, we've been in the buy, and it looks like we will go into the sell today if it stays like this. Not counting the fact that obviously the weekly is going to be a sell also, since it's through the manifold with no problem. This late in the week with it through, it's going to take some major news. Oop. Let's get rid of that. I'm going to put the line in there instead, right next to it, just so that I can remember it. And we'll get rid of this. Right there. But more, the odds of it are like 9.99 that it's going to close on a weekly sell at this point. It's so uniquely rare for it to break through the manifolds like that and not. Now, do I think it's going to last long? No. I think we're going to climb right back up into the buy in a matter of a week or two. And the daily will lead us through that. The daily will jump back into the buy, and then next thing you know, they'll all be flying up again. All right, from there, we zip over to the cable. The cable was a little more surprising. I really thought they were going to get this thing through the weekly, and it did not. I mean, it was up there very close. It was breaking through the zero line. Didn't break the manifold, but it was breaking through it. And then we went into the sell yesterday. And it was a little surprise in the sense that I really thought that they were really trying to turn the cable back up. Matter of fact, it looked like a flight to safety attitude. Every so often, you see the cable act like flight to safety. All of a sudden, out of nowhere, it seems like there's buying, and you see the selling of the other pairs trades around the planet. But the cable seems to be like very comfortable. Hey, Robin. So that does surprise me. I just realized you said hello. I just saw you there, but I didn't realize you said hello. So I say hello back. Yeah, I was expecting the cable to have a lot more life in it. And we were in that daily buy for 5 days, and then yesterday it goes into the sell. But you couldn't take that buy, of course, and the reason why is we're in a weekly sell for 3 weeks. So I mean, it's telling you to be neutral, and I'm not totally convinced we're going to see that much action on the downside to the pairs. I think they're just going to go sideways, because I really think that the market is looking at the Federal Reserve, and they think that the interest rate increases are coming towards an end. And markets love to anticipate future action. And that is the classic. That always is the classic. I mean, that's the nature of the market itself, is try to anticipate. All right. And then from there, we drift over to the Swiss. There's the Swiss. Oh, and let's just show you the cable over here, right there. And that same thing, drop. And the line is curving, and there's pressure on it, the whole bit. And then let's go over to the Swiss. There's the Swiss. The Swiss, again, had that look like it wanted to go up. And, we're in a weekly sell, and then it gets into the buy, and it's still staying there. And it's a little surprising that it's not garnering that strength. Again, that's another currency that has that look sometimes like it's going to go, a flight to safety. In other words, money runs towards it because it's a good place to park. They run towards the American dollar because it's a good place to park your equity. You're going to get it back. You put your money in Switzerland, you're going to get it back. And obviously same thing with cable and euro, and then and some of the other majors. But there are some currencies that don't have the liquidity to be able to handle that, and that is always the big characteristic, I guess you could say, or the confusion. People don't understand. I think it was Timothy was talking about the exotics. Some exotics are just illiquid, and there's no doubt they've been more liquid than they've ever been before. That's for sure. Taking a sip of my tea after talking for 17 minutes. The exotics have gotten a lot more liquidity since their central bank needs to keep them in line, so they become the buyer of last resort, and that's not not rare in this case here. The exchanges and the traders and the institutions and the trading desks used to be the buyers of last resort. And those days are gone. And now central banks are the buyers of last resort. So they really prop up the market. All right. And from there, we slide over to the Turkish lira. No, that's right. We go to the yen. There's the yen. And that yen's been up on that upwardly drift, and it's had no problem climbing through that this week. And just, look at it. In the beginning of the week, it went through the manifold. So we knew that strength was there. That's always a really screaming sign when you're in a daily buy and the manifold jumps through. You know you're going to have buying. The odds, like I said, are like 99.9 accuracy on that. It's just one of those characteristics. It just happens like that. When it jumps that fast, that means money is coming into it in all directions. Not only is it coming in on an intraday basis or a daily basis, but it's also coming in on a weekly basis. So, the deeper pockets trade the weeklies. The less deeper pockets trade the dailies. The less pockets, weaker hands, trade the intraday. That feels so good. Nothing better than some tea in the morning. What else we got to say about the cable? Not the cable, the yen. And let's put it up on J4X right there. Don't really see much more than the fact that it's been trying to act very, very strong here. Had a couple of hesitation days like we had right there where we actually went into the sell. You see it right there. And then we got a volatility day, and the next day it goes into a buy, and then it's off to the races. So, from there, we go over to the Turkish lira. Right there. And that's the dollar one. Let's go to the euro one. We don't even pay attention because of the illiquidity. Look at the swings, the body of the candles. Let me just explain that a little bit more. Oh, that doesn't even help it, does it? Yeah, I guess we go like that. The body of the candle and the high and lows are equal. I mean, that means the liquidity. Look at that. The tail is enormous, and then the body is up, not a down. So it's a bullish sign in candlesticks. But that's what the problem is. Look at that one. Just a rip yesterday. And that could be literally all-time. Let's go to the weekly on that just to take a look and see where the all-time high is. I thought it was 18. Remember, we used to follow that all the time. And we were talking about it hitting the 18. And when it hit the 18 back in December of 2021, at the end of the year, the Turkish government stepped up and offered free puts for all buyers. And that excited things. And that day it got crushed. I mean, that's not a week. This is a weekly chart, but it got crushed over the next couple of days because of that, giving them free puts, and literally brought it down like 75% in price. But they done something wrong because those free puts obviously are not being distributed too wisely. And you can see now we're at all-time highs in the dollar Turkish lira pairs trade there. That's the all-time highs. And the volatility is just tenacious now. It just swings all over the place in a day. The illiquidity of it is very sad. It was a great trading product for a while. Now it's just wild and woolly. And let's go over to the euro. The euro Turkish lira, the one we follow, because it's much more stable, because they're really trading it and using it for delivery compared to the dollar Turkish lira. Right there. And you can see here, nowhere near. See how the candles don't have lines going through the top and the bottom all over the place. It's much more stable. Instead of the other one was like the dollar Turkish lira is like this one, and like this one. They're just all over the place. Lines going in every direction. And you don't see here they didn't go to an all-time high yesterday in the dollar Turkish lira, but here you see the matter of fact it was relatively smooth day right there. And let's put it up over here. Over on Chicago. Right there. And it did have a strong day. There's no doubt about that. You can see that. But it didn't take out this high. Whereas on the dollar, it made another all-time high on it. Now you can see we've been in a daily buy for a couple days. And this didn't push it into the sell. But today it's trying to get into the sell. And at the same time, our fast-moving algorithm has been in a sell for 3 weeks. And now the slow one is just getting in there now, and we're pushing into a daily sell, which to me will be more like this type of action. I don't expect to see us trading down here in the 19 and a quarter, except for the wild moves of the liquidity once in a while does appear on the euro, but not a lot. That's the good thing compared to the dollar. It's Bunny Alex, what's up? What pair is this? This is the Euro Turkish Lira pairs trade. That's what this is. The Turkish Lira pairs trade. Is that better to see like that? Let's save that. Yeah, and and we watched that over the dollar Turkish Lira pairs trade. Solely because the dollar Turkish lira one is just not liquid anymore. And it swings in crazy directions during a trading day. And then every so often it bleeds into the euro one. You can see there, like that day right there. And then what they do is by the end of the day, they find a way to be like, close up or just a little down. But that big body, it's because of the liquidity. And we always assume now, it's the classic expression, like in real estate, location, location, location. So if we, in other words, there's, 8,000 miles, 9,000 miles between Turkey and the United States. And so it's awful hard to see a lot of trade go on because of that, distance-wise. But the European Union borders Turkey. So obviously the euro, Turkish lira, is a much more legitimate price discovery. In other words, you can tell it's traded more because it might be buying fruits or vegetables or delivering minerals or something like that. The display is very fuzzy. Okay, how about now? Does it look a little bit better? I just made it a dark background. Let's do this. Let's make it bigger like that. There we are. And you can see right there. You see that right there. And so, it just shows that pressure. It's just we're getting that little weak. Is that a little bit better? So, Robin says display. Robin, is it any better now? No? I made it dark. Take a sip of tea while I wait for a message from either one of them. Oh boy, once you start sipping the tea, you want to keep on sipping it. Same? I'm not sure what that's all about. Because it looks pretty good on the display. Interesting. This morning, those public announcement alerts that come off, they're testing the system. It was really funny this morning. We had one happen, and it's only a test, blah blah blah, and I noticed that the broadcast became lower in volume. It took a little while for its strength to kick up again, which I thought was kind of interesting. In other words, the volume was lower, and then it slowly, gradually started to get louder again, back to normal. So very interesting sometimes. Okay, good. It's better now. All right, from there we go over to the Canadian, and there's the Canadian. I'm starting to put the black charts in again. I think it looks better with the black chart. There, like that. And you can see that they're joining in together, which is more descriptive, and that is the fast-moving algo was not in a buy. It's been in a sell since back here in the 36 area, And now we're at the 34 area and it's breaking through. So it's going to close in a buy. And then the slow moving one, which is the one we put lines on, is very close to getting into a buy also. So some strength is really kicking into the crude. Oh yeah, not the crude. The can't be red. What's that? The dark one's not good. Should I go back to the gray? And so the strength is starting to kick in on the algorithm. You can see that strength is there, which means in some ways that crude oil is going to go down in value. That's what this normally means. So we're going to keep an eye on that. And at the same time, when we do drift over to the crude, let's put crude in there. You can see it right there. It is flirting with a weekly sell. There is some pressure on it. So we might be seeing some weakness starting to come back in again. Notice we go into a weekly buy for a few weeks, and then we go into a sell again, and then we go into a weekly buy. And now last week it went into the weekly buy. Now it's flirting its way into a weekly sell. And at the same time, the fast algo never got into the weekly buy. It failed at it. It didn't make it there. So this thing could curve back down again. What can't be red? Go back to gray? I'll wait for him to say whatever it should be said. Or is it just too small? Is that what you're trying to say? Like that. It just needs to be bigger, in other words. Yeah, so you can see that there. The fast one never got into that weekly buy. So we got into the daily buy. It kept you from being short for this move. But it's telling you basically, maybe not. Maybe the action on the upside is going to, fail. That's what it's trying to tell us here. All right. From there, we go over to the South African Rand, and we look at gold. So I'll throw the gold up first, and there's the gold. And you can see it's in a sell again, and this is going on the 6th day of a sell, and this is the 2nd week in a sell. And let's see, where is that at? What is that? That is a 5, right? Yeah. So I should put the 3-5 in there. This way we can actually see the fast moving. And I think I'll work on that over the weekend, or maybe even after the broadcast. And so that's the action we're seeing here with the gold. Gold is trying to find a way to go down. Let's put the South African Rand up on J4X. Right there. And it looks like it's just doing its march north. Let's put it up on Chicago Quant. Right there. You just emailed the image. Okay, let's take a look at it. See, where are you? Right there. And right there. And right there. I see. Yeah. Yeah, it has that. Not sure what that's all about. I see that. It has like a very light, and it looks very fuzzy. It doesn't look that way here. That's the odd part. And matter of fact, what's really unique is I have one computer up watching just to see what it looks like, making sure the sound's working, and it's a little fuzzy like that, but nowhere near. I can see a little fuzz, but nothing major. So I see what you're saying. Sometimes it's strong and sometimes it's weak. I think it's the internet itself. Like I said, I was really surprised when it lost its punch. All right. So from there, let's see, where do we go from there? We go over to, South African Rand. You can see there we're making more highs. And, this whole sloping up action equals to, let's put it up over here. It equals to the, right, where is it at? Right there. No, that's not it. Right there, the gold. Gold is sliding down. South African Rand sliding up. That's the way it rolls there. Better with a light background. I'll put it back. Put it back on the light background again. Close. Like that or like that? Which one is better? How's that? There's that South African Rand taking out the political high. And again, unfortunately, no one's out there listening that might know anything about what's going on down in South Africa at the moment. Our media, forget it. I don't even trust them to try to explain anything. You can see there it's been in a buy now for what's that, 10 days now. And it just keeps on climbing, and we're in a weekly buy for like the last 4 weeks. This thing is, whatever they're doing down there, it ain't working. Let's put it that way. All right. From there, we slide over to the Mexican peso. You know, when I was young, that we used to follow like copper and the Mexican peso, but now it's too bad that the Chinese don't have a floating currency. It would be wonderful to watch the difference between copper and their floating currency, but they don't have a floating currency, so there's no way to pay attention to it. Let's do it right here. There it is, Mexican peso. You see, we are still flirting with that bottom 1.61 thing going on. It's not letting it go. They don't want to get back up into the range. And this is making the Mexican peso more valuable against the dollar. And obviously they see better times ahead for their country with the way things are right now here in the States. Their Mexican peso is very sensitive to American politics. And right now it's telling us things are going to be better for them, which could mean that things are going to be better for us too. That's usually the way it works. When it's better for them, it's also better for us. And you can see that weekly sell now, way up here at the bottom end of the old range itself, up in the 19, it's dropped a full handle down. It's a interesting product. In many ways, I guess you could say the euro Turkish lira now trades, like this. It's trading in the 19s and the 18s and things like that, or the 20s or whatever it is. Let me see, what is it? Let me just take a quick look again. Do it through J4X. Turkish lira is trading, euro Turkish lira is trading at, 20. It's in the 20s now. So it's only difference is that the Mexican peso didn't go from 1 to 19 or 1 to 20 in the same time period as the euro Turkish lira has. That's the freak out part. All right. From there, we drift over to the rest of the metals. I guess it makes logical sense to me. So we'll go take a look at the silver. And there is the silver. You see that's been in a sell now for like 14 or 15 days. And it's in a sell for what is that? It's been in a sell now for 4 full weeks, ever since the 24ish area. And here we are at the 21.5 area, and it's there's just no real. There is no buying, no conviction. We saw our pop. This we thought maybe it would get to the 26s, 25.5, 26. We didn't see that happen. It got to like 24.5, and that's about it. And hovered up there for a while. Now, when there's nothing to look forward to, except for if interest rates start to drop, we'll probably see a little bit more firming again in the metals complex. But right now, it's all the strength that we saw back in September and August of last year is all done and gone. And we never got, even gold got up to, we've shown you the contango in gold. So when we're looking at gold, let's go back to gold. So front month gold, or where's it at? Right there. That's April gold of 2023. It's trading at 1,848. And then When we go over to gold trading, where is it at here? I guess we can put it up over here. We'll do that. And then gold trading a year later, a futures contract out in 2024, gold is trading about $80 higher. And so obviously it's some type of delivery issue that's going on there. So in other words, front month gold is down because it's going to have to be delivered, and no one wants to deliver the stuff. So, they hold on to the back months. Let's go find it. So April of 2024 is trading at $1,946 as we speak. And so it's literally $98 higher, almost $100 higher the back month. And when you go into April of 25, it's trading in the it's trading in the 2042 area. So it's near all-time highs. So it's a delivery thing. We're seeing that. It's screaming at us. And it won't go away. And I don't know. It's just something we've noticed over the last couple years. Now, silver doesn't do the same thing, which is curious. Silver, when you go back and look at the silver contract in the same fashion, let's go back to silver. Silver is trading at 21.57. And let's put it up on J4X. And then, you have, there it is right there at 21.58. And when I go and look at silver contract, so this is the March of 2023. And when I go and look at the March of 2024, it's trading a little more than $1 higher. That's it, $1. Now, that's less than that's like, what was that, 5%? Whereas in gold it's $100 higher. So is that 5%? That's about 7.5%, 8%. So I think that's almost 8%. So it's not performing as well, but there is no. Let's put it this way: when I go and look at March of 2025, okay. March of 2025, it's trading almost the same price as March of 2024. Almost the same price, whereas gold is another $100 higher. So the back month situation with silver is nowhere near what it is with gold. So it's very unique there. Okay, from there we drift over to the copper, and there is copper. You see it's trying to lift up. They pushed it into a sell yesterday, and it's trying to lift back up. We got a red dot going on at the moment, so maybe a couple more ticks it'll go green. At the same time, we are flirting with the weekly sell. It doesn't seem to have any conviction to do much more than that. Let's put that up on J4X. Kyle Bass is up on there, from the famous Bass Brothers. And he's basically saying that, don't invest in China. It's a crazy place to be. And there's the copper. I don't know how that's going to play out in the end, but one thing is for sure, it is real strange and very crazy, the whole thing. I saw they're talking about it again today, where we have a $375,000 trade deficit with them right now. $375 billion trade deficit. It's amazing. Why? It's slave labor. That's what all it is we're using them for slave labor. It's amazing. They're the strangest colony. They hate us, and they're taking in enormous amounts of dollars from us at the same time. You would think they'd like us. All right. Then last but not least, let's take a look at the palladium. We do have a couple people around here to ask about it. And there is the palladium. and it's kind of hovering a little unchanged. But that thing has felt more pain than most of the others. Almost over a $200 drop in a matter of 4 weeks. Got down to 14.13 yesterday, and now it's trading at 56. So it's jumped $43 from yesterday from its lows. But we were in a sell and we are in a weekly, and so it was obviously a winner chicken dinner thing there. All right, and from there, since no one's asking to see anything, please, if you would like to see something, give us a yell. Just throw it up on the chat line. You don't even have to say hi. Just put the symbol up there and we'll go look at it. From there, we go over to the energy sector. So here is spot crude that's going to go out in a couple days. It's tried to sell off yesterday and it's lifting up. You can see it's in the weekly. Let's take a look at the back month, because the back month is in a sell. There's the May contract. And it went into the sell yesterday, and it's trying to inch its way back up into the buy, and it's doing that weekly thing also at the same time. So I know that they've raised prices around the world. I see that part. I don't understand exactly what they're driving at, but let's see what Brent looks like. And there is Brent. And Brent is hanging out in the 85 area. And, it's kind of trying to curve down a little bit. Nothing major there. Let's see what the weekly looks like. A couple weeks in a sell, and it's trying to get back into the buy now. So, as our front month, this is the front month of Brent. And our front month of West Texas Intermediate. Let's go find that again. Is trying to roll over. So, and it's touching through the manifold. So the chances of it actually going into a, so it'll probably close out in a sell. And at the same time, we'll be switching contracts. It expires on Monday or Friday, one or the other. I think it's Friday it may expire. So this is right up onto the edge. Tomorrow it expires. Quiet day. Janos puts out more messages, I think he was saying to me, when he's around. So a lot more people tune in. Let's see, what else is there to look at in the energy sector? And that is nat gas. It's playing with the buy today. Look at that. It's trying to lift up. But we got a red dot. And the weekly is not. Even the fast-moving weekly can't get through. So this might be, as we used to say in the hedge fund industry, might be next week's work. It's next week's work. And they would look at that and they'd say, it's kind of bottoming and it's kind of leaky. They always related to things like rowboats and things like that. They use descriptions of things very politely. I always liked that about the hedge fund industry. Not like, oh, I blank and hate it. Always was like, and this is not this week's work, it's next week's work. All right. From there, let's see, where do we go from there? We go to, let's take a look at it on J4X. And at the same time, we'll go to the Spanish company and see how they're doing there. Start off with, you can see there's right there. There's the one we're looking at. It's $2.50 a cubic foot. And in Europe, we hear it's like $26 a cubic foot. Whew. How about that? Joe Biden blew up Nord Stream 2. How about that? What's he up to? Now, here is a natural gas company in Spain. It's the only way we can view. Look at it's trading towards its highs of the last couple of weeks. And you can see there, it's been really battling its way up to get even higher. This is where it was trading at $31 a cubic foot in Europe. And the stock itself had been up to $30.29. So, it's as Janos says, I am its biggest fan. And it's like, well, I don't have much of a choice. There's no other way to actually see live European natural gas prices. except for by watching this particular company, because its stock moves. And I've seen that with other natural gas companies, especially like what is it, Chesapeake Bay, and so forth. They move with the prices and with crude oil. And when they're falling down hard, usually the price of the energy is falling down hard. And then obviously when it's rising, they're rising. So it is, odd in its way, but that is what it is. All right, now from there we're going to slide over to the stock indices. So let's go right to the number one index in the world, and that is the S&P 500. That's the mostly traded. And then obviously the most watched is the Dow Jones Industrial Average. And there is the S&P 500 trading at, and this is the index itself, I believe. Yeah, so it's the index, not the futures contract. And then let's put it up over here. And there it is right there, trading at 41,139. And the index is at 41.28. It's discounted. There's a premium on the futures contract, because of dividends and so forth. So that's what's going on with the S&P 500. We went to a buy a couple days ago. We've been in that weekly buy. On the fast one, we jumped in it a week earlier than the slow one, but they joined in together, and it's been a great move from the 39s to the 42s. So it's been, and we went into the daily buy at one point in the low 38s. And then a lot of people, if we go back and look at it, a lot of people really believe that the low was in October. So we can find that, the October low right there on 10/13 with a low of 3,530. And they feel that that is the bottom. They feel that that's not going to be seen again this year. Now, there's a lot of fund managers that are banking on the idea that they're going to see a sell-off in this product this year, especially going into the summer. They think they're going to see a sell-off. And they're hoping to get back at least to the 38s. And notice it doesn't now, since late December, has no interest to go back to the 38s. You can see here, it started to lift off the 38s and fell to 39, and the buyers came roaring in, and now they're doing it again with higher lows. And our weekly doesn't look very weak at all. There is no soft action. It looks the opposite. You can see there, even the fast-moving algo is above the manifold. It's not. As a matter of fact, it's once it climbed into the buy, it jumped over the manifold and stayed in that area, and it's staying in that area, and it doesn't seem to really, it's not really trying to break down whatsoever. And the daily buys have been the winners, and this one was not. This one was a little sloppy, and no doubt it pushed into a sell. But this one has been a decent little buy again, and then this one here was a good buy also. As the fast moved into a buy, it moved into the buy. Let's move that over right there. And you can see that strength that was with it. It was a good 100 and some odd point move. So I guess the next real action will be this product will find a way to, there is what's the word I could use here? There is muttering, people, a fund manager will get on, a talking head show, about finance and say something like, I could see a melt up. I could see that. Also, they're really a little perplexed because the Tech 100 is outperforming that 2-to-1 right now. So, here we are. Let's put the Tech 100 up there. Now, the Tech 100 is like the blue blood of 21st century companies. And let's put it in right there, and there it is. There's the, it's trading at, we're in the 12s now, 12,000. It was down in the 10,000 area. That's better than a 20 some odd percent. What is that about? It's like almost a 20% move in the same time period. And then when we make this larger, you can see the all-time highs of 16,700 and something. And then when we put the S&P 500 in it, like so, You see it is moving up from the 35s to the 42s, and that is, what is that? That's a 20% move would be 400 points, right? I think that's what it would be. 20% move from 35 would be, I guess it's like about, we're up to 42. I don't know. Someone said it was underperforming. Maybe it's the Dow Jones Industrial Average. I heard that this morning. I was like, really? So I'm looking at it for the first time. Let's see what the Dow is. I think it's maybe the Dow it's underperforming at. So the Dow made its low at the 28,000 area, and now it's trading at the 34,000 area. So that's 6,000 points, and 20% would be 2,000. So I don't know who said that. I heard them say it on the TV, and I think they're totally wrong now that I look at it. They're all performing pretty well. They're very solid. They're off that October low, and they're not really letting it go. You know, they seem to be holding on very comfortably. Let's put the S&Ps up there now that we mentioned it, and we'll also take a look at the Tech 100 since we have the S&Ps up there already. And you can see we're flirting with a weekly sell at the moment. The fast has been hovering in and out of things, but it's still in that buy. Let's see, what else can we say about it here? Now, if it had broken down through this manifold, I would have been much more concerned, but it jumped right back up again. And we're only 59 points. At the beginning of the week, we were 90 some odd points, and it's down 100 points for the day. If this thing closes up 300 points, it's going to be back into the buy again on the weekly side of this. So be careful, traders. This thing might take off in the next 24 hours. And it's definitely looking like it wants to. It's a flag, and it could be basing for the next move on the upside here. Let's see, where's the last time we saw a flag like that? That's a very bullish looking flag. Right there and right there. And then what happens is it takes out this high here. And I wouldn't be surprised if it goes after the, what's that, the 35,500 area instead. And we're at the 34,000 area now. So it could move up another 1,500 points out of nowhere. That's how I feel about the Dow Jones Industrial Average. And so in here, you see that same thing. It's got that flag pattern going on. And they may break out of this. And we're real sloppy in here. Just underneath by $62 now, $61. It's very close to the... All we need is... And the product is down, I think, for the week, isn't it? It's where is it up for the week? I guess it's up for the week. It is up for the week. So if this thing just gets just a little strength in it and takes out that high of 34,300, we'll be in the plus again. And today is just the beginning of the day, so we'll see. Now, what's curious is that slow is touching the manifold. So I am a little more concerned. If it was through it, I would be just, okay, it's not going to happen. But right now, it's just touching it. Let's push that up. It's just touching it by the hair of its chinny chin. And the fast one is not breaking down, which is telling me that we might see that strength today. Or let's put it this way, we're going to see that strength in the next 24 hours. I think isn't there an inflation number coming out today? I think we have an inflation number in literally 4 minutes or 3 minutes. I think we get some type of inflation number. So we could be bracing for that at the same time. And then here you can see on an intraday basis, right there, you can see that they've been taking it down since the Asian close, and there's the European close open. The European market has been taking it down. You can see, we went into the sell right here, and it's broken down. January producer prices, that was yesterday. I think there's an inflation number coming out today. Let me see if I can see some type of projection of what the inflation number might be. Let's see, where's that mouse at? We'll leave this up there so you can see it ticking away. Yep. Yeah, they have an inflation number coming out. Let's see what they have to say about that. Hmm. So they're saying basically because the PPI yesterday was much firmer. Remember, opened the stock up. They closed it higher last night in the end after trying to sell it down half the day. And we're not really seeing anything. We're seeing a sell-off at the moment, a mild sell-off. Now the big question is, is it a freak out? In other words, it freaks everybody out, and they're like, wow, this was pretty wild stuff, and we got about less than 2 minutes now to the number. So this is going to be very interesting to see how this plays out. You can see they've been selling the stocks down, but that's not a lot of damage. I mean, what did it close at last night? Like 57 or something like that. So it's down like 17, 18 points overall. 19 points right now, the S&Ps. It's not the wildest thing. But one thing is for sure, if they pump that Dow Jones Industrial Average up like 300 points or 200 points, it's going to drive it right out. It's flirting with the weekly sell very clearly now. And if it breaks that manifold today, then I figure it's over with for the week. They'll put more pressure on it. And then if not, then they'll start doing that melt up that a lot of money managers are concerned about. They keep on thinking this is going to happen, a melt up. And then they think it's going to be sold down, and they're going to get an opportunity to buy. That's what they're thinking. I don't think it works that way. I think we're just seeing nervousness with the inflation number, and we're going to see that nervousness until today, and then the next economic data, and that's probably why we're probably thinking, a lot of people are thinking that this could be the tail end of the Fed raising rates. Remember, we're getting ready to go into March in literally, 12 days. We're going to be in March. Less than 2 weeks. All right. So we've got about 15 seconds. Let's see what they do with this market. Right now, they're smacking it down. We always say on the trading floor, take it down to take it up. And it's bouncing around. And the number is, you'll see it on the screen. There you go. There you go. You can see that sliding down. Now let's see if they drive it up. They're seeing all the internal data. And, it's more down. So let's see what they come out with the number itself. Because it's in the market now. And it looks like a flag developing there. See if it's a down flag. It looks like to me it's a down flag, and it's going to go make another low. Let's see. Let's see. Just hovering. Let's see what the numbers look like at this point. So where's the screen at? I don't see it on any of the screens yet. We're just seeing it in the price of the trading. Okay, here we go. Here it is right now. Okay. Hot on PPI. 0.7. It's worse than what it was expected. Okay. So it was 0.7% and actual, and they were expecting 0.4. So they're considering that a hot number of January, month over month. Now, year over year, that was in line with estimations. Okay, so housing starts broke down. That's probably what's adding some strength. Is there any strength coming out of that? They went down. Did they make a new low? Or they're doing it right now because it was a down flag. Okay. And let's see. January core PPI 0.5, and they were expecting 0.3. Okay. And what else? Initial jobless claims are out, 194,000 versus 200,000. Not much there. And we've made our new low for the day there. Okay. Because it was a downward flag. And that's jobless claims. Let's see, Robin says. Yeah. 194 versus 200,000. I'm trying to see more of the inflation stuff because it doesn't look that bad. They've made the new low now. Now, is that going to be the low for the day after that downward flag? So let's see what they do with this. January building permits, 133.9, 1.339 million versus 1.35. So down a little bit. And we're seeing some contraction still. So in other words, the Fed is getting what they want. They're slowing the economy, and they would have been happier to see the inflation drop, but it didn't drop. So I can tell you this. When Mr. Obama changed the way they do labor, he also did change something to do with inflation because at the time they were starved for a higher inflation. So the inflation does push higher statistically a lot of times. Now you can see there they made the new low and now they're kind of bouncing off of it. You can see my short-term chart on the left side has jumped into the buy. Where was that at? It jumped into the buy, right? It was a buy, sell, and now back into a buy again right there at a close of 127, and they traded it up to 130.150. Okay. Now they're just cruising around in here, and it's flirting with a sell again. Now over here on the larger contract, of the S&Ps, same thing. Just a different time frame or spatial frame in this case here. We went into the sell up in the 4160 area, and we've traded now down to the 4125 area, or 2475 to be exact. And now they're flirting with it. They've gone back into a sell here. Now let's see if they zigzag in here and then find a bottom and try to lift up again over the next couple hours. All right, traders, that is the news. So now I got to figure out what to. Maybe we could talk about flags. What is a bullish flag versus a bearish flag? Since we talked about it live here, and I told you it was a bear flag, and it went down and made a new low. So maybe we'll do that tomorrow. How's that? Technical analysis: bear flags versus bull. Sounds like a good title to me. All right, this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.